Welcome to our weekly legal update video, where we dive into the latest developments in income tax, GST, and corporate laws. If you're a business owner, accountant, or just someone keen on staying ahead of the regulatory curve, this is your go-to source for insightful breakdowns. We've sifted through the most significant rulings and decisions from the past week, breaking them down in a way that's easy to grasp, yet packed with depth. Let's kick things off with the updates from income tax law, where some fascinating tribunal and court decisions have emerged that could reshape how we think about assessments and exemptions. Starting with a notable ruling from the Mumbai Tribunal in the case of Sheila Daniel versus the income tax officer. Imagine being a member of a housing society and getting allotted a flat completely free of cost back in the assessment year 2007 to 8. Sounds like a dream, right? But the tax authorities tried to add this as income under Section 56(2)(v). The tribunal, however, stepped in and ruled that at that time, this section only applied to monetary gifts exceeding 50,000 rupees from non-relatives. It didn't cover immovable property or rights to it. Later amendments to the law don't apply retrospectively, so the addition made by the assessing officer was deleted. This decision is a big win for taxpayers dealing with historical allotments, emphasizing how tax laws evolve but can't always reach back in time to bite you. It reminds us of the importance of understanding the timeline of legal changes and could prevent unnecessary disputes in similar legacy cases. Next up, another Mumbai tribunal gem in the case of Ankit Gems Private Limited versus the income tax officer. This company, deeply involved in diamond trading, faced an addition under Section 69C for alleged bogus purchases from a shady concern. The whole thing stemmed from an investigation into another group, but the assessee flat out denied any such transactions, and their purchase records backed them up with no matching entries. The tribunal scrutinized the evidence, or lack thereof, and concluded that without solid, cogent proof against the company, the addition couldn't stand and had to be deleted. What's intriguing here is how it highlights the pitfalls of guilt by association in tax probes. Just because one entity is under the microscope doesn't mean you can paint everyone with the same brush. For businesses in high-value trades like diamonds, this reinforces the need for impeccable records to fend off baseless allegations and underscores the tribunal's role as a safeguard against overreach. Shifting gears to the Bombay High Court in the Commissioner of Income Tax versus Dr. Ballabhai Nanavati Hospital case. Here, a hospital trust had a panel of consultant and honorary doctors, paying them honorariums and deducting TDS under Section 194J as professional fees. The tax department argued it should be under Section 192, treating it as salary, but the court disagreed, pointing out that these doctors weren't on a fixed salary, could practice independently at other hospitals, and lacked an employer-employee relationship. Thus, Section 194J was the correct choice. This ruling is particularly relevant for healthcare institutions and similar setups, clarifying TDS obligations and potentially saving organizations from penalties. It paints a vivid picture of modern professional arrangements, flexible, independent, and not fitting neatly into traditional employment boxes, which is becoming the norm in many sectors. Wrapping up our income tax segment with the Raipur Tribunal's decision in Jaiji Shikshan Samiti versus the Deputy Commissioner of Income Tax. The assessee filed their return on October 27, 2018, and the audit report informed 10B a day later on October 28, still within the extended due date of October 31st. Yet the authorities deemed it defective because the report came after the return. The tribunal set aside that order, allowing exemptions under Sections 11 and 12. This case is a classic example of procedural technicalities versus substantive compliance. It shows how a minor timing glitch shouldn't derail legitimate claims for charitable or educational entities. For trusts and societies, it's a reassuring nod that as long as you're within the overall deadline, flexibility exists, encouraging timely but not overly rigid filings. Now, let's transition to the GST law updates, where the focus is on compliance, refunds, and fair play in pricing. The Delhi Tribunal tackled a profiteering case involving a cinema hall owner who didn't pass on the benefits of reduced GST rates to ticket buyers. After the rate cut, ticket prices stayed the same, leading to established profiteering. the owner was ordered to deposit the excess amount plus 18% interest, but intriguingly, only for the 3 days from June 28 to 30, 2019. This short window might seem peculiar, but it underscores the precision of anti-profiteering measures, ensuring consumers get their due without blanket penalties. For entertainment businesses, it's a wake-up call. Rate reductions aren't just tax savings. They're meant to trickle down, and failing that can lead to swift repercussions, keeping the market fair and consumer-friendly. In another Delhi High Court ruling, the appellate authority had overturned an original order and granted a refund to the assessee. The department tried to withhold it by citing an opinion under Section 54(11), but the court shut that down, stating that without any pending proceedings against the appellate order, the refund must proceed. This decision cuts through bureaucratic red tape, affirming that once an appeal succeeds, refunds shouldn't be stalled on flimsy grounds. It's empowering for assessees who fought and won their cases, highlighting the judiciary's role in expediting justice and preventing undue delays that can cripple cash flows for businesses. Over in the Patna High Court, a case addressed the suspension of an assessee's GST registration without notice or a hearing. The court directed the Joint Commissioner to give both parties a fresh chance to respond to the complaint, keeping the suspension in abeyance until a final decision. This emphasizes due process in GST enforcement. Natural justice can't be bypassed, even in urgent matters. For registered entities, it's a reminder that suspensions aren't final without your say, promoting transparency and fairness in a system that's often criticized for being heavy-handed. Finally, let's explore updates under other corporate laws, starting with SEBI's probe into the Hindenburg allegations against the Adani Group. After a thorough investigation, SEBI found no violations in the claims of fund routing through intermediaries. Additionally, loan transactions between Adani companies via certain entities from financial years 2018 to 19 to 2022 to 23 weren't classified as related party transactions under the LODR regulations. This clearance is significant, as it resolves high-profile scrutiny that shook markets, potentially restoring investor confidence and setting precedents for how such allegations are handled. It illustrates the complexities of corporate financing and the rigorous standards regulators apply, offering lessons for conglomerates on transparency in intergroup dealings. Closing out with a decision from the Delhi NCLAT in a matter involving an operational creditor who supplied raw materials on credit. Before the Section 8 demand notice, the corporate debtor had emailed disputes over quality and discounts, establishing pre-existing issues. Consequently, the Section 9 application for insolvency was dismissed. This ruling stresses the importance of documenting disputes early. It prevents creditors from weaponizing insolvency proceedings when genuine disagreements exist. For suppliers and debtors alike, it's a balanced approach that protects against frivolous claims while encouraging resolution outside courts. That wraps up our weekly dive into these legal updates. Stay tuned for more, and remember, knowledge of these changes can be your edge in navigating India's dynamic regulatory landscape. If you found this helpful, like, subscribe, and hit the bell for notifications. See you next week.